Hello traders, Euro Area Macro, August 2025 review. As a professional, here is an in-depth analysis of the Euro Area Macro outlook, drawing on the provided sources. Executive summary. The overall outlook for the Euro Index, near TWI, over the next 1 to 3 months is moderately bullish. This sentiment is primarily supported by a robust external surplus, benign energy costs, and decelerating wage growth. However, the upside is constrained by unfavorable interest rate differentials favoring the US dollar and an already extended long positioning in the euro. The Euro Index is currently trading near its 52-week highs, suggesting potential for tactical overbought conditions and consolidation risk. Key macroeconomic indicators and trends: growth and economic cycle. The HCOB Flash Services PMI for August moderated to 50.7, indicating tenuous expansion. Despite this moderation, economic activity has surprisingly outperformed expectations, leading the European Central Bank, ECB, to adopt a wait-and-see approach. Second quarter GDP growth was a modest plus 0.1% quarter-on-quarter. Any negative surprises in PMIs could impact the Euro Index, TWI. Inflation and wages. Headline inflation for the euro area stood at 2.0% year-on-year in July. Core inflation was approximately 2.3%, with services inflation at around 3.1%. Services inflation is highlighted as the sticky component that will significantly influence the future inflation trajectory. The ECB's wage tracker suggests a clear deceleration of wages towards approximately 3.2% in 2025, with further declines expected later in the year. This trend reduces hawkish pressure on the ECB. The negotiated wages indicator for Q2 is due on August 22nd. Labor market. The unemployment rate remains stable at 6.2%, and job vacancies, Q1, are at 2.4%, suggesting reduced wage tension at the margin. European Central Bank ECB monetary policy. Current stance. The ECB's deposit facility rate, DFR, has been set at 2.00% since June 11, 2025, following several rate cuts initiated in 2024. Future outlook. The recent discourse from the ECB emphasizes prudence regarding further rate cuts. The modest growth data and core inflation near 2.3% support a short-term pause. ING's analysis suggests the ECB is in no hurry to implement additional cuts. Next meeting. The next ECB meeting, including a press conference, is scheduled for September 11, 2025. The flash HICP for August is due on September 2nd. External factors and flows affecting the euro. Interest rate differentials. The spread between the U.S. 10-year Treasury, UST 10A, at approximately 4.33%, and the German 10-year Bund 10A, at approximately 2.75%, results in a spread of approximately plus 158 basis points in favor of the U.S. This creates a structural headwind for the euro if the dollar maintains its carry advantage. However, if the UST falls post-Powell's comments or the Bund rises due to absorbed supply, the Euro Index TWI could gain support. Current account and capital flows. The euro area recorded a current account surplus of €36 billion in June, with the 12-month average around 2% of GDP. Reuters highlights non-resident purchases of euro area debt in June, which provides fundamental support for the euro TWI and euro NEAR. Energy costs and terms of trade. Energy costs with TTF October 25 at €35 per megawatt-hour and Brent at $76 are contained compared to 2022 levels. This translates to less drag on the euro in terms of trade, which is positive for the currency. Political and trade risks. US-EU tariff agreement. A framework for a US-EU tariff agreement includes a base tariff of 15% on most EU imports, with relief for autos from 27.5%, contingent on the EU presenting relevant legislation. While this framework caps the risk of a full-blown trade war, the timing and retroactivity regarding auto tariffs remain conditional, creating short-term noise for specific sectors and overall sentiment. This headline risk can affect the euro via growth expectations. US dollar, USD, and global risk appetite. USD strength. The US dollar index, DXY, is stable around 98 to 99, and the VIX, volatility index, is around 15 to 16. The dollar is holding firm with Powell's Jackson Hole speech on the radar. A stable or slightly strong USD generally limits significant rallies in the euro. Jackson Hole impact. A hawkish shock from Jackson Hole, i.e. Powell sounding less dovish, could revalue the USD and potentially relieve pressure on the euro index. Euro index performance and positioning. ECB near nominal effective exchange rate. The euro's effective index has remained firm in 2025, showing recent resilience supported by the external surplus and the diminished energy shock. This provides structural support. Market Euro Index, investing. The Market Euro Index is currently trading near its 52-week highs, around 138.4, within a range of 124.34 to 138.98. This indicates tactical overbought conditions and a risk of consolidation if the USD strengthens or interest rate differentials widen again. Tactical levels. The zone of 138.8 to 139.5 is identified as a resistance area. Initial buying support on pullbacks is expected around 136.5, provided the macro environment does not deteriorate. Speculative net long positions in EUR stood at approximately 116 contracts as of August 12, representing an extended position high percentile over 12 months. This suggests an asymmetry towards corrections if pro-USD or dovish EU data emerges. Options 25 delta risk reversal. The positive risk reversal for EUR calls in 1-month options indicates that hedges are seeking additional upside. However, the skew has been volatile. Fiscal and issuance outlook. European government bonds, EGBs, and EU issuance. 2025 is anticipated to see another record supply of EGBs, with the European Commission expected to issue around 160 billion euros, NGEU, others, in H1 plus H2 2025. Quantitative tightening, QT, with QT ongoing in the Asset Purchase Program, APP, and Pandemic Emergency Purchase Program, PEP, the private market will need to absorb more duration, potentially leading to a slightly higher risk premium. Catalysts and downside risks. Catalysts for upside breakout. Add signal from the ECB that additional rate cuts will be very gradual. Downside risks. Upside surprises in services inflation. Thanks for watching this video, subscribe to the channel and give me a big like.